Hey, it's Tony Cardinelli with Cross Country Mortgage. Had a great question from an agent friend of mine. How to use future income to qualify for a mortgage. And the specific question I got was, how many pay stubs does a buyer need to provide when they're changing employment to get a mortgage? And so that really does have to do with future income. And there's a few different scenarios I need to talk to you about. First of all, if you're starting a job and you're an hourly worker, you're going to need to start your new job prior to closing on a new home. You cannot start after closing. The lender's going to want to verify that you showed up to work and you've got pay stub or two. Up to 30 days of pay stubs are often required because that lender's trying to reestablish what your hours are going to be that you're working, as well as they're going to try to figure out what the average income is going to be for you to use. They will often just use your new hourly rate and the hours that you worked on average for that period of time. If you do have bonus or overtime income in a prior hourly job, you're not going to be able to take that with you. It's under very rare circumstances that the lender's going to use prior bonuses or average new bonuses into old bonuses. They want to see a pattern of receiving that bonus or overtime income in your new job so that they can establish that it's going to continue into the future. Now, a salaried worker is a little bit easier. You've got some flexibility here. And typically this is somebody that's relocating to a new area, starting a new salary job, or maybe they're starting a new salary job in the near future, and they still want to shop for a home right now. And that's okay. So Fannie Mae and Freddie Mac do have guidelines that allow lenders to close transactions and allow the borrower to start their new employment up to 90 days or earlier since the closing of the transaction. So they've got 90 days to start the job, and that means their offer letter would indicate that they're starting a new position within 90 days of the closing date. FHA requires 60 days, so if you are getting government financing, plan on 60 days. But conventional conforming financing, they're going to look for an offer letter typically. That offer letter is going to need to be non-contingent. And that means if there's any contingencies in there, like if you need to have a blood test or something, or drug testing, or you're being tried out for a period of time, they're going to need to get any sort of contingencies removed from that offer letter. And that means typically an employer letter signed by the new employer indicating that they've cleared those contingencies. It cannot be contingent on the company winning a contract, and then and only then you're going to get this new job. You're not going to be able to do that. The employment needs to be non-contingent. So I hope that helped you. Of course, as with all my videos, I try to produce a checklist or a job aid for somebody that is either looking for employment and they're changing jobs, or if you're a real estate agent and you're looking to help your buyers that are considering buying a home and considering new employment at the same time. So download my checklist, use it in your business or use it in your life. And if there's anything else we can do for you, you can reach out to me anytime. Thanks a lot. Hey, if you like my video, please be sure to subscribe to my channel, as well as to check out all the links in the description below. Thanks.